on countering China right now. The Senate passed the newly named Innovation and Competition Act yesterday, 68-32. It focuses on technology, innovation, and research in order to counter the threat from China. It now heads to the House. But even more important than this is President Biden's executive order last week concerning the so-called blacklist of companies investing in Chinese companies. Joining me right now to discuss all of this is former Senior Director of International Economic Affairs at the Reagan National Security Council. He is the former chairman of the Congressional U.S.-China Economic and Security Review Commission, Roger Robinson Jr. Roger, it's great to have you back. Thanks very much for being here this morning. I've got President Biden's executive order here from last Thursday, and I want to get your take on this. Does it have teeth? First, assess how important this tool is for the U.S. in terms of its pushback on bad behavior from communist China. We have the wherewithal in this country to either approve or not investing in Chinese companies that are tied to the Chinese military. Your thoughts on that tool?
Well, I think, Maria, that this is arguably the most powerful and fearsome policy tool in America's non-military arsenal. This is a worse nightmare for China in the sense that it's escaped for 2 decades now any focus on the money. Trade, yes. Technology, certainly. But where has been the fact that over that 20 years, there's been a multi-trillion-dollar flow, a kind of free lunch program that's defied regulation and diligence, and screening. We didn't even know who was in our markets, and found to our chagrin that there were a number of corporate national security and human rights abusers, many of them even already sanctioned by the United States, that are in the portfolios of well over 100 million unwitting American retail investors today. So we have now an immense new source of leverage, and it's something that needs to be used. And I think that all to the good that we finally arrived.
Well, this is really important because when you invest in companies that are tied to the Chinese military, you are funding the expansion of the Chinese military and its plans to overtake the United States. You heard President Biden the other day say China believes it's going to overtake the U.S. within 15 years. Do we want to be paying and funding for that expansion of the Chinese military? President Trump tried to put the law down that you could not invest in any Chinese companies tied to the Chinese military with this blacklist. Assess what President Biden did last week. He expanded this blacklist on U.S. investment in Chinese companies, a policy originally started under President Trump. 59 companies with ties to China's military or its surveillance industry will be banned from American investments beginning on August 2nd, Roger. But there are some loopholes here, and I want to go through them because everybody knows I'm very skeptical of the CCP. Assess what we're talking about here with this executive order.
Well, what you just mentioned in terms of the addition of surveillance technology sector as one of the criteria to appear on the OFAC list is a big deal because that advances tremendously our human rights policy in China and elsewhere around the world precedentially. So I just want to underscore that that was a part of, I think, a net strengthening that took place here. Obviously, the capital market sanctions of President Trump were preserved, but also expanded. Now, it's not to say that this is going to be an easy haul or a perfect picture. For example, the Pentagon has been basically excised from the process. The so-called Pentagon PLA list, as I used to call it, Section 1237, has gone away in terms of being able to trigger capital market sanctions. So now it's just the Treasury OFAC list, the Office of Foreign Asset Control. Now, that is a very potent sanction and list, as it were. It's probably the most feared. But at the same time, it is run by the Treasury Department. And they have, in the past at least, tended to be too alert and responsive to Wall Street's concerns here on loopholes and various fine print, shall we say. I think that in this administration, I get the impression that that Wall Street grip on Treasury, however, has weakened considerably, and I think it's proven in the nature of the announcement last Thursday.
Right.
But
well, we
more.
know that there are many Wall Streeters that are trying to push other Chinese companies to invest in. I'm talking about people like BlackRock, Larry Fink, Bridgewater, Ray Dalio, all the big investors who want to invest in China, Goldman Sachs, who want to invest in these companies. And I'm wondering what your thoughts are about, number one, the Treasury in charge of this list, the Treasury getting bullied by some of these Wall Street firms. And also there's this old executive order, or the old executive order from Trump automatically had 50% or more owned subsidiaries that appeared on the Pentagon list. And I also see that there is one issue that I want to talk to you about, the fact that there were 5 companies that were on the initial list, did not make it on this new list. Are there ways to get around this? The subsidiaries of these large companies, can investors invest there? Are there ways that Wall Street is going to keep their claws in these companies and keep their investors investing in companies in China that are tied to the military? In your view, Roger?
Well, that's a multifaceted question, but let me start with Treasury and then move to the subsidiaries, because you've hit on something terribly important there. As far as the Treasury Department, they've had to look to themselves to think about what is the alternative to the fateful imposition of robust capital market sanctions against Chinese corporate national security and human rights abusers. I mean, protecting Wall Street fees and CCP's interests, as opposed to our national security fundamental values and scores of millions of at-risk American retail investors. It's not a very appetizing choice. I think it's very stark. I think they woke up and smelled the proverbial coffee here, and I think that that's why we had a better than expected announcement last Thursday. As far as the subsidiaries are concerned, you're quite right that in the previous executive order, 13959 of the previous administration, you had automaticity in the sense that 50% or more owned subsidiaries of listed companies were automatically added to the list. Now, that's not the case now. That provision was deleted. Now you have to have the subsidiaries placed individually on the list. Now, that opens the door to concerns, because a number of these corporate bad actors in China, the holding companies, the parent companies, aren't publicly traded. I mean, the way they fund themselves is through public subsidiaries. So if you start playing fast and loose with subsidiaries, you could be undermining fundamentally this entire exercise. That's a great concern. It's going to require real vigilance on the part of the outside folks, well, like myself and others, who are going to make book on this routinely.
And Roger, why were 5 companies dropped from the list? You are also wondering this. Some of the companies were dropped, and they were also on the entities list. So is anybody playing fast and loose with this by dropping certain companies off that list so they don't face sanctions?
Well, we don't know yet, Maria. I mean, this is still a very new thing. I will say that the administration has claimed that they're going to start adding to the list very soon. I think the proof is in the proverbial pudding there. So we'll see.